Today in the grain market, soybeans were a little bit easier. That China export demand is slowing a little bit. I think the fact that the meal hit a new low for the year, and even oil has really been under pressure as well. Futures did extend below that $15 mark, really all the way down to 14.89, which was somewhat of a surprise, but it was able to recover. So I think that that says a lot about the market, although we're just watching it day to day. There has been some selling of some managed funds of those longs, but really not the commercial. So I'm not sure that I'm going to get on board that the high is in just yet. Now, option vol is at 21% for soybeans, and out of the money calls, the open interest is a little bit on the decline. Now, that's just indicative of the market. I think there was maybe a little bit of an exhaustion as the market rallied here, but clearly the momentum kind of on the downside is a little bit surprising. Now, corn did rebound. I think that early sell-off was mostly technical, of course, adding to yesterday's that. The 22-cent rally off the bottom, I think, could be a nice indication that, we have a good bottom here. But it's just really, day to day right now. I think that the fact that we were looking at a 604 objective for corn, and I mean, yesterday's high was 61 and 3/4, and now it got down to 602 and 3/4 today. Just tells you just how volatile these markets are, but it did achieve that objective, and the fact that it bounced off, I think, is a positive. I mean, even right now, the bean objective is $14, so it's still quite a ways away. But the wheat objective was $6.48, and so it's kind of right there. It certainly looks like these markets are just kind of meandering a little bit because it's still pretty much early in the growing season. But volatility index in the corn did jump up to 41%. So corn has still been the leader of the market, and with the 41% volatility, that just lets you know there is a lot out there, and there is expectation that the volatility is going to continue. Now, the prices are still high overall when you look at the historical numbers. Wheat was lower as well. I think it still is overpriced globally. Better weather here, and even in Europe, it's a little bit dry, but it's just like not enough to bring these prices down. And I think that that's one of the issues that we've had with these markets. And I think the momentum is really pressuring that wheat, and it did achieve, of course, the objective that we talked about, 648. But I have to say this, the fact that it closed just over 648 might be an indication. It's something to watch tomorrow, and we'll see. Now, the option vol right now is below 33% for July and below 32% for September. So it really started to kind of like move away from where the volatility was at over 40%, just like corn. So I think that's starting to slow a little bit, but even historically, that's still pretty strong. The markets just seem to be hungry for something to trade against right now, and all three grains, corn, wheat, and soybeans, are all oversold right now. So I think that everyone is looking for where the bottom is here, because all the other factors in the market are still there. So something to watch as we go into tomorrow's opening.